Hello, 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 everyone. Mike Arnold's here, co-founder, Path Trading Partners, along with Bob Iacchino. How is everyone doing today? Hope everyone had a great trading day. We did rally in the indices. We are still long the S&P. Just an FYI, definitely raising stops. We'll go through that in a bit. By the way, if you are new here and want to go through some really good market analysis every day, please consider ringing the bell, hitting the subscribe button, and hitting the like button. Let's see who's here today. I gotta fix that other camera angle. Hey Amit, how you doing today? Hey Wavy, hello, hello. Yep, mother of all rallies today. Was waiting for this to unfold again. There's no guarantees, but we were in bullish mode. I talked about that last week and even yesterday. Crazy day. I closed my position too soon from Friday. Well, that's why I love to trail. Take some off the table and then trail the rest. I mean, that way you get the best of both worlds. You lock stuff in at key targets and then you continue to trail. If you get a pullback move and it's another buy pattern, you can always add back to your core position, you know. But once you're out, you're out. Then a lot of people chase things, and that's never a good thing because they tend to chase and get in at the wrong time. Rather than don't be afraid to continue to raise a stop and leave something on the table. Hey, Jake. Hey, Sailing, how are you doing? Hey, Christoph. Hope everyone is, again, fantastic. So, after hours today, not a ton going on. Let me switch cameras, by the way, here. There we go. Well, that one's a little blurry for some reason. Why is that one blurry? Hmm. Hold on one second. That is a very strange. That is very strange. Let me try this. There we go. Oh, it's on autofocus. Oh, okay. Well, we can keep going. Sorry for the brief interruption. Just wanted to get that a little better, and I'll have to play with that after the live stream. Looking at this, there's not a ton that I'm watching for after hours. I'll probably glance on a couple things after this live stream, but nothing earth-shattering to after the close today. From my perspective, this is just a quick rundown so you can glance at it in case you weren't aware of something you were following. Having earnings today. Tomorrow morning, though, we have definitely watching ExxonMobil. Crude again rallied. Gonna watch UPS just because of deliveries and consumer could be slowing down. Gonna want to get their guidance homes with the Pulte Group and Lennox. Gonna take a look at that, just seeing what else. We'll glance at UBS. Let's see. I'm just looking. That's about it for tomorrow of the majors that I'm watching. Really interested to see what UPS says. And earnings for ExxonMobil. Let's see what else we have. We had Chicago PMI beat today, but that's just something minor. We had the FMOC speaking today a bit, and the market liked what was said there. What else? Oh, tomorrow we're watching the ISM manufacturing PMI. That's going to be pretty big. That's going to be the major one I am focusing on tomorrow morning. So that's where we stand. Here's your heat map from today. You can see Apple up again 2.6%. Google up pretty decent. Amazon up, and Amazon has earnings this week. Microsoft up a bit, but slowing down. Tesla was up huge today. Again, we had this market rally. PayPal and MasterCard were up also. What was I looking at? Let me just take a look at a couple things real quick. Crude. Well, then we'll get into the overall crude. This again, marching up higher. We got that pullback sort of into the rotation zone with this choppy move sideways. This is a sideways correction. Again, you can see how nicely it didn't really retrace on a daily. You see it just moves sideways to work off the slight overbought condition and moving up strongly. The last little aggressive buy was right here, by the way. So we're still expecting higher prices in crude moving forward. Now let's take a look at the indices. S&P triggered this sloppy double, but still qualifies. Again, we are still long. I've raised a stop today on the S&P. And you see hitting that first harmonic, but this triggering the double. My next target is about a 45.37. Then if we go through that, I'm really focused on this 45.77 to 45.82 area with the declining 50. So that is if we get through this 21. Now this is where I start moving up a stop pretty aggressively. We're closing in on the other side of the daily rotation zone. You can see now you have the first cross of the 4 hour happening, and we're back to a bullish mode in there, but still bearish mode in the daily, and in the weekly we are still in neutral mode. So lots of mixed signals here. That's why I'll aggressively raise stops up here. So, and even if we do get a close above this 21 EMA top of the rotation zone, that just means it's back to neutral mode on the daily. Still watching for somewhat continued upside and then another significant roll over. Just don't have the timing down for that one yet. Let's see what else we have. Yeah, we'll to bring that up on the other live stream. We'll get Chinese EV delivery numbers. NAS gets monthly close inside the rotation zone. We'll take a look at that in a second. If I can spend some time how I establish points for harmonics on the daily 4 hour and 1 hour, I'll take a look at some of that today. And we will continue to get through our market analysis. I've already gone through the upside targets. I'll list them again. Minor is 45.25 area. Major, again, 45.38, 39. Then above there, just go off about 45.80. There's a little cluster in this area, but 45.80 is close enough. On pullbacks, my major area is right now about 44.35. If we did drop below that, I don't want to see it get below about 4,400. That's the bottom of the 4 hour rotation zone. Just breaking back into the resistance, becoming support. That's going to be key. For bullish mode, I mean, pretty much all day was above bullish mode from today. Tomorrow, it's really got to come up. And to maintain, it's got to be above about 4,500 on that. Let's see. Let's get over to the NASDAQ. NASDAQ, here we go. Back in the daily rotation zone, also triggering a double. Targets on that 15,038.39, right above the 200. So this is very key, and the top of the rotation zone, all coming in this area. So that's definitely an area to aggressively continue to raise stops for me personally on anything in the NASDAQ. Then 15,236 and 15,435. On the weekly basis, reminder, we're still in bearish mode, and that second target is just returning to the weekly rotation zone. 4 hour, you can see back to bullish mode, major support coming in. I'm watching about 14,591, and then 14,400. Don't want to see it get below 14,400. For continued bullish mode tomorrow, I need about it to stay above 14,800 roughly. That's just an area right around there. So I'm continuing to watch for some follow through here, but again, raising up stops. Let's take a look at the Dow. Dow back closing above the 200. The Dow futures, that is, closing above the 200, not yet to the other side of the rotation zone. And we had a harmonic cluster at 34,908. Next area is 35,116. We have a whole bunch of resistance right up here. And then if we get through 35,116, my next target area will be 35,319 to about 35,376, right near with the 50 period. That's still technically in bearish mode on the daily. Weekly is still technically, we're just going to go with neutral mode. And again, we got pretty oversold, so I'm not surprised to see these strong rallies, but I'm going to start watching for topping patterns again. This is moving up the stops also on the Dow. Key support now coming in about 34,600, and then next major area is about 34,400. Don't want to see it back below 34,400 on any pullback. That would be back below the 4-hour rotation zone and back into major this sort of major consolidation phase, which if it gets that low in the consolidation phase, then I'm watching for a return to test some of these lower levels. Let's see what else. Bullish mode for, oops, I hate when I do, ooh, come on. There we go. I want this one. Bullish mode for tomorrow, I'm at about 34,930. Above there, I will stay in bullish mode. Reminders, 35,382 is a pretty key target if we get above this old trend line and harmonic. And so don't ignore that 35,382. And then the 4-hour flat 200 simple is about 35,534. So those are great areas to move up stops. And if you haven't taken the stuff off the table, you might want to consider taking partial profits and then trailing a stop higher. Let's see. Amit, you asked, can you spend a little time on how you establish points for harmonics on the daily? Well, they're pretty much the same on everything. I use major swing highs and swing lows. For example, here on the Dow, we had a swing low for these harmonics. We had a swing low. Let me pull this off really quick so you can see. Swing low right here. From the 24th of January, you see clear swing low, no other low went beyond it, and this was the swing high before we broke. So I'm going to use key major swing highs and swing lows. So that's how I got these harmonics. Now to the downside, we have this major swing high to this swing low. All right, so that gives me my downside harmonics. I like to use the long swings, and this is the longest swing on there because this was the highs. See, at this point, I'd have to raise these up in case we're going to new highs. But, and I like the most recent. But the most recent isn't going to give me a lot of other information. That's why I haven't updated on the Dow. And that's the key area. So, like, if I'm coming out this 1 hour, let's use this if you want the shorter time. And this is whatever market you're going to do. The most recent, again, if I wanted... if this is now technically a pausing bar on the 1 hour. So if I wanted the long swing, it would be here to here. You need a pausing bar. All right. That's the longer term swing. And then the most recent swing would be, I like this little one on the breakout move to me would be the most recent swing. Oops. Okay, so you have the longest. You can put on other swings, but that reinforces the other harmonic we already have on here. Then now the more recent swings are the more minor ones. So 35,204 would be minor. The more significant one would be 35,275. Okay, so that's how you're good. That's the example of the most recent swing and the farther back swing because this is a significant low. Now, like a 4 hour, you don't have a pausing bar yet. You'd still keep the major swing would be here. The most recent swing would be from here to here. Okay? Because if you're looking at the full, sorry, I keep clicking on the wrong one. This is the most recent swing based off the 4 hour. And this is sloppy because it's in this little consolidation pattern. I would rather see something trending and have a better, more recent swing. That's why I don't have a bunch of them splattered on the charts. I'm going off the major one for now. Now, let's say we get a pullback and another nice rotation up in a 4 hour. The most recent swing would be that pullback and then a pausing bar on the 4 hour. Start playing with those two. And then you can add in your other swings. But here's what I would not do. I wouldn't have a swing from here to here, here to here, here to here, and here to here. That makes no sense. You're just going to get lines all over your chart, and it's not going to help you identify the key levels. So what I tell people when they're getting started with this is use the longer term swing, like the longer term swing in here. Let me just re-anchor these. The longer term swing in to the downside, this was the longer term swing. You see, it just doesn't line up exactly until you, because of the chart time frames, but it will re-anchor appropriately. So the longer term swing was from this key high on the 5th of January down to this major low. The more recent swing would be this one that tapped. This would be the major, more recent swing hitting the other side of the 4-hour rotation zone back down. So here would be the other end if you wanted the harmonics going down. And you see that gives me 32,738, and then I have a cluster area. It's a little wide, but then I'd look to fine tune that with a reverse harmonics once it started rolling over. I just don't go through all the major swings on this because it's just too many lines for most people to utilize, and this is going off the bigger picture. But that's how you do it. So that's that. Let's see. Monthly close, still not convincing me to go along for a longer term trade yet. Again, I'm on short term, just swing trade for this bounce. I am not on a major bullish bottom right now. And we have end of month window dressing between Friday. It's another reason we're still long. End of month, and it can roll over even into the beginning. Like, you know, you still get some follow through even on the 1st of February. Today, 31st of January, still end of month window dressing. I'm going to start seeing how it reacts in a couple days from now. Yeah, short-term bullish, you can't fight the trend, and this is where you can have a short-term rally within a bigger-term potential sell. That's why, again, I'm raising stops aggressively. Looking at the daily on the NAS, if the price action gets through to convergence of the 21 EMA and the 200 SMA on the daily, does that signal anything about the duration or strength of this rally? Here's your NASDAQ. I mean, it would, if it gets through this convincingly, and just continue to watch for the double targets to play out. No, because we were really oversold. You see how oversold? We're not yet overbought yet. We're going into this clear path move. We triggered a double. And longer term, again, you have the first cross rotation zone. Until we really, I wouldn't get overly aggressively bullish until we got at least above 15,650. Anything there is still correction, and this was deeply oversold even on the weekly, you see. So this can bounce pretty well and then roll over again. And there's internal stuff I'm following still. We don't have, this is more of a relief rally. Let me go off something else too. You're welcome, Amit. Remember I talked about some of my ratios, value to growth, and it was overdone. Remember, we're starting seeing divergences down here. It's actually, we got a little mini double bottom, but this is just growth kicking back in. Remember, value's been in charge, and now this is growth kicking back in, and we're seeing a bunch of these, again, money was flowing into a bunch of growth stuff that just got hit. And this growth stuff still incredibly way overvalued. But I'm not surprised to see this kind of price action returning. I mean, it could even go, we could even continue this. Growth versus value could even run a fair amount higher with just returning to a weekly rotation zone and then roll over again. And I'm still not seeing a major broad market support. And just for example, look at ARK today. I mean, ARK, which is overdone, not surprised to see this. We talked about, I'm expecting a rally in ARK. But there's a lot of junk in the ARK portfolio, and ARK was up big today. Okay? What was ARK up? 9%, 9.5% on junk. I mean, Tesla was up big. That's their big holding, but you certainly get their individual holdings. That's a lot of junk there, and it rallied, and we had this double bottom that triggered. So, okay, I could see ARC continuing to rally before another rollover. It's just that stuff got overdone, and now we're getting the bounce. A lot has to change from an internal market uh, participation rate for me to get really, really bullish. Again, we're going to trade the technicals, but for me to get really, really bullish and say, okay, I'm going for all new highs and I'm going to give stuff more breathing room, we're not there yet. Let's see. So, and NASDAQ, 15,650. First area on the I target with the clear path. It's right around this double, but the first full target on the clear path is about 15,500. Before you get to 15,650, the next target on that would be 15,009. But I'd really focus right here at this breakdown area. Yep. And that's another Apple. See, again, we hit the first and second target when we had the earnings thing, and I wouldn't be surprised to see Apple come even make a run higher. And this is just going to be a huge distribution top to me on Apple. Again, I wouldn't be surprised to see it again right down to the weekly rotation zone. Didn't get a close below the weekly rotation zone, rotating up, but each rotation now is starting to fade. We're getting faded. Remember, and the way these the weighted market cap indices work, the weightings are so narrow in a handful of stocks. You can see these rip your face off rallies until things like Apple rolls over, Microsoft rolls over, and Microsoft even it's weakening. So you get things like Microsoft rolling over, and then Apple eventually rolling over, and you get Tesla rolling over again. You start to see things start to turn. Look at NVIDIA. We have a minor double triggered, so NVIDIA could go a little higher, but then I'm going to watch for a rollover again. These are all just temporary bottoming patterns. There's no major long-term bottoming patterns on a lot of these yet. So that's just where I stand. I'm going to glance at a couple more things. By the way, gold, it was looking like it was going to trigger a buy pattern today, not triggered yet. Silver, again, nothing. It's just consolidating, but gold was up $11 today. We couldn't trigger the buy pattern. Dollar, I'm keeping a close eye on this, especially if the dollar gets another rotation back up. Okay, big pullback with the rally today, but we start to see some dollar strength again, and these start to top. Then that's where I aggressively, again, take some more profits and raise a stop again. Notes, 10-year notes, we still have a potential double bottom, but it'd have to get above this rotation zone still. And if we're looking at the treasuries and the yields, here's your yields. Again, we spiked up through the harmonics and now just sitting at this rotation zone. Key area where I'll really start paying attention is if yields break back below about $1.70. 1.7%, I should just say it that way. Until that happens, it's just, this is where treasuries will be interesting because treasuries, again, the bond market is smarter than the stock market. So if you don't see a major pullback in yields, but you start to see the market continuing to rally and then yields just sort of go stagnant and don't pull back anymore, another reason I will then say, all right, this is rallies. Just you got momentum growth temporarily, money's piling into that from oversold conditions, and everybody is still around in my sort of circle of people I talk to. Buy the dip, it never fails. Buy the dip. Everybody's still in buy the dip mode. So many people are still buy the dip of the names that brought us here. Without, they don't give a crap about anything value oriented. They don't give a crap about consumer staples. They're still with the high flyers. They're still with the high PE ratios. They're still, let's just go back into the stuff that we keep dumping our money in because we're going to go to new highs. And that's, the sentiment has not changed yet from my perspective. And as long as that sentiment's in place, there's a lot of downside risk. So that's where I sit with that. Let's see what else. Fiverr. Again, this is something I will be bearish on again on a rollover, but look at this move. This is a great example. Way oversold, and now you get this massive rally. This is what you also start to see in bear markets. You start to see these, especially a lot of crap just gets their rally pants on, and you see upside. I mean, nothing's fundamentally changed in Fiverr besides it's got way oversold, and finally it's putting in at least a little short-term move. Look how far off the weekly rotation zone it is. So again, I could see this rallying back to 98 to 100 easily and then rolling over. Nothing's changed with it though. That's a great little CRUS. Serious Logic. Nothing. I mean, they had earnings, and they beat, and they're up post. I mean, here, if you want to, if you're gonna watch this, you got to see if they hold about the 95.50. They're up on the after hours earnings. You want to see if they pull back at all. 95.50, 95.25, 95.50. If they start dropping below that, I'd watch for the gap fill. It then turns into sell. The earnings, if it continues to rally, they have major overhead resistance at $100. Let's see. Yeah, I just looked at that. Great earnings beat. Now you got to see if that earnings beat stays in or not, or whether it starts getting sold in the next couple days. They don't understand the high PE names will get whacked all year with these interest rate hikes coming, and I'm starting to see already, even though we have our nice little Fed Watch tool, you know, it's still 88%. I've already got more people saying, oh, this is going to drop back, and they're not even going to, you know, there's a potential they won't hike in March. Well, I'm not seeing that. The Fed Watch tool is not seeing that. I'm not thinking they're going to do 50 basis points, but I think 25's in the bank for sure. Another interesting thing is if you want to look at the comparison, it's just interesting. You can watch how it's gone. So here's the current, but you see on the Fed Watch tool, here's the current 50 to 75 basis points, which is really, we're at 0 to 25 now. So 50 to 75, that would be your 50 basis point hike, and it's edging up. Between the end of December, which is here, week ending January 24th, which was here, the day ending the 28th, which was the end of last week, which was here, and now the current, and you can see that's still edging up. So these rate hikes, and we have signs of stuff slowing down too, but you got to trade what is. Until I see the broad market participation, not changing my stance. For a lot of these people though are I mean, here I'll probably go on a rant at some point because of the markets, I know people in their now 80s that they have a checking account to pay their short-term bills, and then everything else 100% in stocks, because there's no yield in savings account, and they're like, well, I'm not putting my money in bonds at these rates, so they're not in bonds, and they are in stuff that's, you know, it's buy the dip. Every time, even 80-year-olds, is buy the dip. I need 20% return next year. Especially with inflation, I need 20% return. It's a dangerous game that's being played because rates are so low. There is no yields are so low on bonds. We have now higher inflation, and it's forced people who shouldn't be all in on the stock market, and even people, who are retired, all in, 100% all in, and they're buying every dip. So that's what scares me long term. The market is priced in 3 rate hikes, but we'll see another drop. I don't think it's priced in 3 rate hikes. I already see people talking that it is that it's people are already doubting that. So I don't think it's priced in at all. I don't think that. Looks like crypto market is moving the stock market. Do you still? I actually put out my crypto update. I said I was even on Saturday. Did you watch the video? I said I still expected some more upside in the cryptos and then another rollover. I put that out on Saturday. My net worth is still in popsicle sticks and twine, and I'm having a difficult finding an exchange I can trade. An exchange you can trade. You'll have to elaborate more. Everyone with 50 bucks in a Robinhood account is a professional trader now. It's insane what the market has become since the pandemic started, and I agree with. There's actually less than that with some of this pullback in the meme, but there's way too many people still think they're trading geniuses, just like in the end of the dot-com boom, just as even at the end of the housing boom, which everyone was a housing and a stock genius until they weren't. So then it's again top long-term tops happen slowly and then very quickly. Okay, in the broad market, it takes a while to really roll it over long term. And then it starts when you don't get the dips that really bounce, that's when it starts cascading lower. All right. Scary age 80, I'm 39 and 30% in the market, 20% trading, which sometimes is cash and I don't see a trade, and the rest is cash. Maybe I'm too cautious. I don't have a problem with this at this point, you being cautious with the overall market. And you're still young, so you can make up any losses longer term. Imagine if you're 80 and we get a 50% downdraft in the market in the next year. Then guess what? And you're counting on a 20% return just so you can keep your lifestyle and beat inflation, and then you get a 50% drawdown. Well, you don't have much time to make up those losses. Remember, you lose 50% in the market. You need your remaining money to have 100% gain to make up. So you need to get 100% on your remaining money after a 50% drawdown. Just remember that. Manage risk always first. All right, it's exhausting in this market. It's been overdone for a long time now. Let's see if ES can hold the 200-day. Again, even if we rally above that, I'll start watch when the internals keep deteriorating again. I'll watch for another leg down. We have a NFP report on Fridays. Do you think this report is still important after the drop last week? I think everything's going to be important. Unless it shows something that where, the Fed says we have room to play because we're at full employment, unless we get some major weird employment number that really has the Fed do a double take, I don't think it's going to change. That's the only thing that I think could throw a monkey wrench into things. If people said, oh, okay, now employment's starting to weaken, therefore the Fed won't be as aggressive with the hiking. that's the only way I see that being a major play. All right, with that, I'm going to call it a afternoon. We'll do the company that shall not be named, which was up big today, which again we expected. We had some buy signals on Friday. So we'll do that quickly, and then I'm going to take it easy. I am feeling a little tired, and it's only a Monday. Thank you for tuning in, everyone. Really appreciate all the questions, all the comments, everyone for being here. It keeps the live stream going. You are welcome, Josh. You are welcome, Amit. You are welcome, Sailing. You are welcome, Wavy. And with that, shall call it the end of this live stream. See everybody shortly. Bye for now. Thank you, Liquid Vistas. Everyone who's on this channel is the best too. Thank you, Rich. Thank you for all your comments, good, bad, indifferent, questions, criticisms, complaints. I'll do them all. Thank you. Bye for now.